8.7%. That's the expected move the options market is pricing into Target this week, and it's the biggest bet on my entire board because this is the week Wall Street stops guessing about the American shopper and actually gets to read the receipts. 5 of the biggest retailers in the country report in 4 days. Coach B here. This is the week ahead. Last week was quiet up top. The S&P barely moved, up 0.4%. The NASDAQ up about 1%. Small caps led with the Russell up 1.2, and the VIX just sat there calm at 14.3. But here's the shift. Last week, I was breaking down Rocket Lab with the options pricing a 97% implied volatility, a true moonshot. This week, the single most volatile name on my board is Target at 39%. The tape rotated out of momentum and straight into Main Street. Let's get into it. First up, Home Depot, ticker HD, and it reports first Tuesday morning before the open. It's at $338.86, sitting right in the middle of its 23-day range, 323 up to 358. At the money IV is only around 29%, and the straddle, the at the money call and put together on the September chain, prices in about a 6.5% move, roughly $22 either way. That puts the range around 317 to 361 after the report. Home Depot is the big ticket read. When people renovate a kitchen or re-roof a house, they're spending confidently. An investor watches the housing cycle. A swing trader sees a defined event Tuesday morning with vol that comes right back out after. Second, Lowe's, ticker LOW, Home Depot's twin, and it reports the very next morning, Wednesday. It's at $218.47, up in the top third of its range, $199 up to $223.91. At the money far is around 34%, a notch higher than Home Depot, and the expected move is about 7.6%. Call it $16.50. Here's the lens. These two sell the same nails to the same customers. So when they report a day apart, the pair is the real signal. If Home Depot guides strong Tuesday and Lowe's guides soft Wednesday, that gap tells you who's winning the same wallet, not just how the sector is doing. Third is the one the options market is most nervous about, Target, ticker TGT. It reports Wednesday, and it's at $154.48, right at the top of its range, $132.55 up to $156.47. At the money V is around 39%, the highest on my board, and the straddle price is in about 8.7%, roughly $13.50, a range of about $141 to $168. Think about what that IV is telling you. The most nervous read on any of these 5 retailers is only as volatile as the calmest names I covered last week. Target's turnaround is the story the market can't agree on, and the chain is charging up for it. Fourth, TJ Maxx's parent, ticker TJX, and it reports Wednesday morning too. It's at $152.11, and unlike Target, it's down in the lower third of its range, 148 up to 163. At the money, Vox is only around 25%, the calmest name on the whole board, and the expected move is just 5.6%. That's the off-price trade. When shoppers get cautious, they trade down to the discount racks, and TJX tends to win exactly when the others struggle. The market is pricing the least drama here, which is its own kind of tell. And fifth, the headliner, Walmart, ticker WMT. It reports Thursday, and it's the bellwether, the single best read on where the everyday American consumer is spending. It's at $115.27, up near the high of its range, $106.79 up to $118. At the money V is around 30%, and the straddle price is in about 6.7%. Call it a $7.70 move, a range of about 108 to 123. Walmart is where trade down shows up first. Groceries, essentials, value. When it guides, it is not just guiding its own stock, it's telling you how healthy the consumer is heading into the fall. Now line them up side by expected move. TJ Maxx about 5.6%, Home Depot 6.5%, Walmart 6.7%, Lowe's 7.6%, and Target at the top 8.7%. Every one of those numbers is a fraction of last week's Rocket Lab, at 21%. That's the whole point of this week. The chain isn't pricing fireworks, it's pricing a data dump on the consumer, and the expected move is the market's own one sigma guess before you ever place a trade. Here's how the week lays out. Tuesday, Home Depot reports before the open. Wednesday is the stacked day. Target, Lowe's, and TJ Maxx all report. And then at 2 p.m. Eastern, the Federal Reserve releases the minutes from its July meeting. Thursday, Walmart reports before the open, and weekly jobless claims drop at 8:30 a.m. Eastern. And keep one eye on the horizon because the week after this is the big one, NVIDIA earnings on the 26th and the Jackson Hole Symposium, where the new Fed chair, Kevin Warsh, gives his first keynote. So what's the real macro risk this week? It's two things stacked on Wednesday. Those Fed minutes get parsed line by line for how split the committee is heading into September. And I'm not calling which way. I'm telling you the market will trade the tone. But the bigger signal is the retailers themselves. If Home Depot, Target, and Walmart all flag a shopper who's pulling back, that consumer red moves more than any single print. And the most exposed names are the consumer discretionary retailers you're watching all week, plus anything that lives or dies on the strength of spending. Quick reminder, this is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. Every ticker and level here is a teaching example, showing you how the expected move changes the way you'd size up a name by time frame. That's your week ahead. 5 retailers in 4 days. Target pricing the biggest move and the most doubt. TJ Maxx pricing the least. And Walmart Thursday morning as the tiebreaker on the American consumer. If this helped you walk into Monday knowing what's on deck, subscribe and I'll break down next week's setup, NVIDIA and Jackson Hole when it gets here. Drop a comment. Which of these 5 retailers should I dig into next? Good luck in the markets, no matter what stock you're into.